Hey, this is Dale Corpus from Realty One Group BMC Associates, bringing you another episode of the Sold by Dale Show. This is episode number 2, and we're continuing our discussion on residential mortgages, but this time I have a completely different guest. So my new guest is standing right next to me. His name is Andrei Tuason from Patelco Credit Union. So just wave hi really quick to our audience. So when you think of getting a mortgage, most oftentimes you think of a big bank or a mortgage broker, but do you ever think of a credit union? It's okay if you haven't. Many people don't even realize that credit unions even offer mortgages or what they can offer. So we're going to cover more of the reasons of why getting a loan from a credit union might make sense for your own scenario. So Patelco is one of the biggest credit unions out there, and you might even have an account with them already. They got a variety of portfolio products, which means that they write their own guidelines, and a lot of lenders don't even have access to their products. So why don't you stay tuned so you can learn more. Okay, so Andrei, I know you. My audience doesn't know you yet. All right, so why don't you tell everybody a little bit about yourself, more of your mortgage background, and just something interesting about yourself.
Well, I actually started mortgages back when I was in college, so about 15, 17 years ago. I started cold calling for a mortgage broker in college.
Okay.
We were calling people with 7% rates, and we were refinancing them down to like 6 or 5. So it was really fun. It was good money. I was still in college.
Okay.
I paid for a lot of Vegas trips, but I fell in love with it.
Was it a brokerage or what was it?
It was a mortgage broker. Yeah,
Okay.
It was a brokerage. I don't even know if they're in business anymore.
Okay.
And then after I graduated, I just liked lending, and I started doing that. I started working for a private family-owned lender that we were doing like 50 units a month back in like 2002, 2003.
That's a lot of units. Yeah. Okay, got it. And then was that also part of that same brokerage, or was that a different one?
It was a different one, and then after that, I moved to a bank,
Okay.
and then now I'm at Patelco Credit Union.
So you went from a broker to a bank, and now you're at a credit union. And like, speaking of credit union, that's one of the reasons why I wanted you to be a guest, because again, most people don't even know what a credit union is. Like, what is a credit union?
Yeah, I didn't know much about credit union either until I started working one. I know it's like a not-for-profit financial institution. It's
Okay.
member-owned, so that's what's different with the banks. Banks are stockholder-owned.
Okay.
The main thing is we give back to our members, right? So how we give back is we provide, with our profits, we're able to give back and give them lower rates on the loans or higher rates on the savings accounts.
Okay. So I have a quick question. I do know that you guys do what we call portfolio lending, where you guys do your own guidelines per se. Does that money come from the money from the members out of curiosity, or where does that money come from?
Yeah, from my understanding, so I could be wrong, but from my understanding is that we do have a lot of savings and deposits because we're offering a lot of good rates, and so we have a surplus of deposits that we're using for lending, which allows us to do a lot of portfolios.
Okay, that says. And then speaking of just differences between working between a credit union and a bank or a mortgage broker, what differences do you see since you worked at all of them?
Well, one big difference is the bank I worked at was really big, right?
Yeah.
So I worked in Palo Alto, but our processing and underwriting was in Arizona.
Okay.
And if we needed exceptions, we had to call Florida.
So you're calling all places all over the place.
It's nationwide, right?
Okay.
But Patelco, our corporate is down the street in Pleasanton. We have
so you're really local.
Yeah, underwriters there, processors there. The advantage is they know the Bay Area market. They know that the houses are appreciating. They know that we have H-1B borrowers. We have
a lot of tech buyers. Yeah,
exactly. And people, Arizona and Florida may not understand, these things.
Actually, that's a good point, and I think that does help in those unique scenarios. Yeah. Is there any competitive advantage to your products, would you say? Like I was talking about mainly on those portfolio products. Is there any competitive advantage using them, or tell me more about them?
Well, one of the competitive advantages of working up or doing your loan with Patelco is that we'll close fast. You guys have a 30-day escrow. We'll close faster than that.
Okay.
Really, we're so confident in that we're actually, if we don't hit a 30-day escrow, we'll pay for the borrower's first month mortgage.
Oh, wow.
The big reason of that is we, underwrite our pre-approvals.
Okay.
And so the only thing we're really waiting for is the appraisal and title.
Okay, so you're talking about the difference between like a pre-qualification, which most borrowers are getting, where they're saying that the income, assets, and credit are good, but you're talking about a full-blown pre-approval. Can you talk a little bit more about what that is?
Yeah, and there's really no difference between a pre-approval and a mortgage application. Basically, I'm asking for everything that I would on a live transaction, right? And so the underwriter is underwriting it like a live transaction.
Okay.
So when you
Without a property address.
exactly.
Okay.
So any conditions or any questions that the underwriter will have will already have resolved it.
Okay.
So and then the only thing we'll wait for is the appraisal once you go into contract.
Going back to those portfolio types of products, I mean, what are some of the most popular portfolio products that maybe folks don't realize that you have?
Probably our most popular portfolio product is our 5-5 arm. So I don't know if you're I'm sure you're familiar with like the 5-1, the
Yes,
mortgage,
5-1
7-1, the 10-1 arm, right?
Okay.
So those arms after the initial fixed period adjust every year, right?
Right.
This 5-5 is better because after the initial 5-year period, the rate will go up or down.
Okay.
But then it'll be fixed for another 5 years and then another 5 years. So it gives you the benefit of the lower rate that arms have, but it's less risky because instead of changing every year, the rate may go up just every 5 years.
So every 5 years it'll change, but can you clarify how long that loan term is? Because it sounds like it's 15 years. Is it 15 years?
No, it's a 30-year loan.
So it's a 30-year loan.
Yeah,
Okay,
so the payments are based off a 30-year amortization.
Amortization schedule, but the rate only adjusts every 5 years. So that's good. That's good. And there's I take it too. There's a lifetime cap for that type of product.
There's a 5% lifetime cap, but you're not going to hit that until maybe the 15th year.
Okay, that makes sense. Another product that I hear on the streets is the fact that you guys are really good at doing less than 20% down on high purchase prices. Is that correct?
Yeah, so especially in the Bay Area, I mean, you have to save a lot of money to get into a house, right? So what we offer, and some other lenders do offer this, is called an 80-10-10 product. Okay. So instead of putting 20% down, a borrower would just have to put 10% down and then take out a 10% second mortgage, right? Okay. The good thing about Patelco is that we don't increase the rates because you're doing this. So someone who's putting 20% down on a 30-year fix may be able to get a 4%, right?
On the first mortgage.
On the first mortgage,
30-year
right?
fix.
Yeah.
Okay.
If you're doing an 80-10-10, if you're putting less than 20% down, we'll still give you the 4% on the 30-year fix on the first mortgage, right?
I mean, that's true because it's like most of the other lenders, all the lenders like to base things on risk, so they price things higher and there's more risk involved, and you guys don't even have that add-on.
Exactly. So right now, we may be offering 4, other lenders will be at 4.5% because of that second mortgage.
On that second mortgage, what type of product is on that second mortgage?
It's an equity line, so it's a variable. The minimum payment is interest only, so actually it might help the borrower because it's a lower minimum payment, right?
Yeah.
The good thing about the equity line though is that if you do pay it down, you're able to access it in the future.
Any approximate ranges of what those equity line rates even look like on a second? Sometimes people freak out when they hear second mortgage that they think their rate is astronomically high.
Yeah, I mean it depends by FICO score, but you're looking at between 4.25% to maybe 5.25%.
Oh, it's actually pretty good still. So it's not too far off from our first mortgage rate because that makes sense. And on the loan size, I don't think we covered this. So what I know is that you guys could go to pretty high purchase prices here in the Bay Area. You're using that 10% down type of product. Any idea of how high you can go on a purchase price? Yeah.
So the loan amount is 1.5 million. So we could do up to a first mortgage of 1.5 million. First mortgage.
Which means the purchase price could be even higher than that.
I think like 1.7 or something.
Okay, got it. All right. Okay, that makes sense. So that covers a lot of ground. A lot of and a lot of times I'm working with move-up buyers that are buying up in that price range. So that makes sense. When we talked about what makes Patelco different with these products, and just sounds like you also have local underwriting as well. One question I have for you is, everybody knows a loan officer. I know so many loan officers. What makes you different as a loan officer, would you say, compared to everybody else in your competition?
Honestly, I don't think I'm any different than any other good loan officer, right? Like all good loan officers, we want to focus on the customer service, right? We want to make sure that the client is satisfied, but also the realtor, right? We want to make sure both of you are satisfied. If I had to say one thing I do differently is maybe I tend to process and underwrite my loans more than another loan officer. The biggest reason is I want to catch anything right away in the early stages, so it won't cause any delays in the latter stages.
Okay, so you're just trying to prevent a lot of stress for everybody, myself and yourself
including me.
Yeah, that's true. So you're more proactive about it, which is good. And it looks like the cool thing about you is that you have the experience and the foresight to catch these things, whereas maybe a newer loan officer might not be able to see the stuff. Exactly. Is that correct? We talked about this too. It's like the timing of a mortgage. How long does it take to close first, like a purchase mortgage, would you say, in general? I don't think you're always doing 28-year closes, I take it.
It's 30 days. Like I
Okay.
said, we're gonna close in 30 days because if we don't, we're gonna pay for the first month's mortgage,
Okay.
right? The last two I closed 20 days.
Okay, that's pretty
Alright.
good.
But if it's underwritten prior, I think 21 is a fair estimate.
And then I know that refinances, they work on a different timeline because purchases have my priority, but like, so the same question for refinances, how long does it take to close something like that?
Well, we do lock for 60 days, so we give ourselves 60 days, but in the last couple of months, it's really just been 30 to 40 days, and it's not because we're slow or anything, rates are still, solid, it's just like, we have a very efficient process, we have good processors, good underwriters, we don't over condition,
Okay.
so everything's just closing at this point.
Okay, cool. So in terms of just buyer profiles, I'm assuming since you've been in the living industry for a while, I mean, is there a specific buyer profile that you're looking for, or can you describe like what kind of buyers or borrowers that you work with?
There's no one specific borrower. I've worked in the peninsula for the last 8-10 years, so I guess most of my clientele is affluent. However, I have no problems working with first-time home buyers, people with less % down, or average credit.
Okay.
I really don't discriminate. I've
Okay.
been here for so long that I just met so many people.
I want to even just talk about that. Like, let's just talk about the segment of folks that are move-up buyers. So a move-up buyer is somebody that currently owns a home and they're just trying to buy their next home to a bigger house, so a bigger purchase price.
Yeah.
And I know you encounter this a lot, and I encounter this as a big bulk of my business actually. It has its own nuances, its own challenges, because a lot of times the market is so competitive when they're buying that they can't make an offer contingent upon selling their previous property. I mean, a lot of times we try to figure out if there's ways for the buyer-borrower to purchase without selling first. I mean, do you have special products or special ways to handle that, out of curiosity?
Yeah, I mean, the one thing we do for buyers who want to retain their current house is if they decide to rent it,
Okay.
We'll actually use what we think the estimated rental income will be. So you don't have to get a renter, you just gotta tell us that you're gonna rent it.
So where are you getting that information from?
We'll get it like from Zillow, and they'll actually have the rental estimate.
Okay, the Z rental estimate or something
Exactly.
like that, right?
But when you actually go into contract, we'll order a report, a form 1007 from the appraiser,
Okay.
and then they'll tell us what the market rents are, and then whatever.
So say what did they say was 2,000 from what the appraiser said? Do you use that full amount?
No, we'll actually use 75% of that because we
Okay.
gotta take into account expenses, whatnot.
Okay, so that would offset the mortgage of the house and where they're currently living in.
Exactly.
So you don't necessarily have to hit them for that full amount.
Exactly.
So if I hear you right, you didn't mention anything about a rental agreement. Like, so where does that come into play?
Yeah, we don't need one. As long as you tell us you're gonna rent it, we'll believe
Okay.
you, and then we'll just use whatever the rental estimate is.
Okay, well that's good to know. I think that's actually another, for me, just because I deal with a lot of folks that are buying their next
Yeah.
home. It's like this sounds like new information to me as well. So that's a good advantage for you and Patelco. On the first time home buyer front, tell me, I still also deal with a really good amount of first time home buyers. Any good information or any good tips for them? Like what do you do when you work with a first time home buyer, and any advice?
The main thing I tell them is just to make sure they have money left over. Usually what happens for first time home buyers is that I start talking to them because they've saved up enough money for 20% down.
Mm-hmm.
But when we get to talking, it's like they don't have any other money, like that's all their money, right?
Okay. So no reserves, you mean?
And no reserves at all, right?
Okay.
Every last cent's going to the down payment, and I just have to remind them that there's other expenses needed when you close on a loan, right? You have title fees, you have lender fees, property tax, transfer tax fees, and then 30 days later you have a mortgage payment.
Okay.
So the main thing is just to make sure you budget, make sure you have money left over for emergencies, and
what's your take on credit inquiries? Because a lot of the first time home buyers are very concerned about, when it comes to shopping around and getting their credit dinged, and they're very scared about, being pushed down to the next tier where they might not be able to qualify for a particular mortgage product. Or do you know what I'm saying?
Yeah. I get that all the time. I mean, it's hard to tell whether a credit score will go up or down with an inquiry, right? but it's not automatic that's going to go down, and that's what people tend to think, that's going to drop drastically if you have their credit pulled. It just won't, especially in the Bay Area where we have people who've been trying to buy a house for 2 years now. They keep having to re-pull their credit for pre-approval. I haven't seen their score go down. The ones I see go down are the ones who are doing multiple inquiries, 5 inquiries this month, 5 inquiries next month, opening credit cards, stuff like that. But if you're just doing an inquiry for pre-approval and you've done it a couple of times, that's not going to lower your score.
Okay, well that's good to know. And then, what's your take on the outlook just for mortgage rates till the end of the year? I mean, do you have any opinions about it?
I stopped trying to predict rates back in 2012, right? I mean, it's hard. You don't know, whether the Fed meet, whether there's a unexpected military action in the Middle East, like all that stuff, affects the rates, right? I mean, I guess if I had to give you an answer, the general expectations, rates will go up, but I don't really worry too much about it, just because I know Patelco's rates are always going to be competitive, right? So I know that whatever the rate is at that moment, in a rising rate environment or a low rate environment, I just know Patelco's going to be competitive. So whatever client comes to me, I just know I'm giving them the best rate.
Okay, got it. And so I'm good. It's like is it okay to have the audience reach out to you that they had any personal scenarios to run by to you?
Yeah, I mean, it doesn't have to be an application. If you just have questions, if you have scenarios, just give me a call, 650-799-8251, Andrei at Patelco Credit Union.
All right, cool. So I appreciate your being here again. You got that information. He said his contact information, so feel free to reach out to Andrei if you had any personal scenarios that you wanted to run by him. So thanks for being here.
Thanks for
See you
having
next
me.
time. All right.